Welcome back. Please join us in welcoming Sean Binkley from Dominion Lending, and we're talking about, if you see a property listed and you're looking to buy it, what happens if you pay over the asking price, which is what people are doing in Toronto.
Yeah, we're hearing about this lots in Toronto.
In Vancouver.
Vancouver, larger centers, even Hamilton now, it's getting crazy out there.
Really?
Yeah.
Well, I guess people are making that commute from Hamilton to Toronto.
They got to get further away, and the GO train now goes to Hamilton, so that's a growing area. We haven't seen it as much in Kingston, but from a financing perspective, there's a few things we have to be aware of. If you end up into some type of, whether it's a multiple bid situation on a property, or you're going to offer more than what the actual asking price is.
Well, we are starting to see it maybe this past month because it is a seller's market as far as listings are concerned. So there may be that case here, maybe not as to the extent we're seeing in Toronto, where several offers are coming in. Some of them are going to be above asking. But it's important for the person who is making that offer above asking to be prepared with what they should know about going into it.
Yeah, just know what you're getting into. The problem occurs that if you buy a property and you pay over the asking price and an appraisal does not justify that value that you're paying for it.
Meaning you're paying way too much.
That's the problem. So we've got an example of that here. So if you buy a house for $350,000, the asking price is $350,000. You actually offer $375,000. It's the house of your dreams. You love it. You buy it. The problem here is that if you're putting 5% down, your down payment may only be based on the original asking price or what the property may appraise for, the $350,000. Now, it could appraise higher at the $375,000, but this is what you need to be aware of, that if it appraises only for the original asking price of $350,000, then you've got to pay your 5% down is based on your $350,000, not your $375,000. So that's $17,000. Plus, you got to make up the difference in cash yourself. So what you thought was a 5% down payment of $17,000 or whatever it might have been on $375,000.
You got to be prepared.
It's now $42,000. Yeah, so that's the huge difference, and people are sometimes not prepared for that. Now, this will also occur sometimes in rural properties with lots of acreage, and again, we're mainly getting into properties where it's insured by CMHC or Genworth Insurance, where you're putting 5 or 10% down, anything less than 20%. I had a situation the other day where someone bought a property. It was listed for $300,000. I think they paid $290,000 for it, but it was 80 acres. So the property itself is only appraised based on the house in 5 acres, not the house in 80 acres.
Oh.
Yeah, most appraisals will only do the house in 5 or 10 acres. So that's where you have to be ready to pay some extra in cash in case that happens.
And that's a very scary situation for someone who thinks, okay, I got it. Headache is over. No, headache's just beginning.
Exactly. So you want to be prepared. Ask your mortgage broker about that. Talk to your realtor about it. You might even want to, in some of those situations, if you do have time, especially if it's not a multiple bid, maybe you may want to get an appraisal done ahead of time. Sometimes it's okay if you're paying over asking. Maybe there's a reason for that. But you want to substantiate that value with an appraisal. If you're paying cash for a property, it doesn't matter. Pay whatever you want, right? Or if you're putting 20% down, then you can always move to, a smaller down payment if that situation occurs.
So if you were prepared to maybe pay 20%, this is a good situation where you're willing to put 20% down, and you are getting that at over asking. You're now, it looks like, maybe 15%.
It might be a lower down payment, but you have to be prepared that that's going to cost you more with an insurance premium through CMHC or Genworth as well.
Well, how is the lender sitting with that?
They're okay with it as long as a lender will only, and this is the thing, people will say, well, I bought it for $400,000, and it's like, well, you can, some person can offer $400,000, it doesn't mean that it's worth $400,000. So a lender's going to use the lesser of two values, either what you paid for it or what it appraises for. So if you paid $400 for it and it appraises for $300, it's only worth $300.
Are we seeing a lot of buyer's remorse in Toronto the past year or so?
I don't know. I talked to some colleagues out there, and it's crazy. I mean, I heard of one the other day that I think one listing came up in Markham, and it was 47 multiple offers on it. I think the asking price was $800,000, and they ended up getting $150,000 over asking.
Now, does that buyer know there was those many offers coming in? Are they allowed to know?
Yeah, I think it's just, that's a situation where, and we're seeing a little bit here, but it's not crazy. And,
Yeah.
and we can ask Matt more about that, Matt Lee. But they know that that's the day that the offers come in. I think a lot of these buyers in Toronto have sold properties before, so have a pile of money, or they're foreign investors that are coming in and buying up the property.
And willing to pay that extra tax on it too.
Exactly.
Because they have it. Listen, thank you so much.
Thank you.
All right, Sean Binkley from Dominion Lending. If you have any questions, here's how to get a hold of them.
Thanks.
This Dominion Lending segment has been brought to you by Sean Binkley, broker and wealth and insurance planner.